Hey traders, welcome to this week's Forex Focus, a show where we look at the major currency pairs and we look at the opportunities it could be setting up in the markets. Now, this week is going to be a little bit of a challenging week. You see, last week we were talking about how we took profits on our dollar strength positions. So that's sort of like the positions where we were selling pairs against the dollar, i.e. the Aussie dollar, Euro dollar, etc. And then we were talking about how we were going to look for some follow through on that in those pairs. And unfortunately, Mr. Trump came out, obviously, and announced his tariffs, which ultimately sent the markets into absolute chaos. And, for the most part, actually, they've caused a complete reversal in a number of pairs. Now, that's from a technical perspective. It hasn't necessarily changed much from a fundamental perspective, although it has very much changed the sentiment. So we're in this kind of strange dynamic where we've got lots of different forces pulling against each other, which makes it very, very difficult to trade. So with that being said, and what we have to do in those situations is either just kind of sit out of the market completely, so that is, don't take any trades at all. You also have the option to look at some of the crosses. So the things that I've been talking about with my private trading clients is saying that actually we're not going to look at the major currencies, we're going to look at the crosses, so things like maybe the Euro Aussie, the Pound Aussie. But if you are going to focus on the majors, which essentially is what this show is about, then really I think what you have to do is you have to trade it technically, and you have to accept that there is a higher element of risk added to these trades than there normally would be, because you're not just trading the fundamentals or the technicals, you're also trading the sentiment, and the sentiment of the market can change very, very quickly depending on what's said. And obviously at the moment, with the trade wars going on at the moment, the markets can go literally in any direction in a split second, which makes it very, very challenging to trade. So I would recommend, for those of you that are kind of new to this, that you probably don't do anything this week, at least until things are sort of settled down and we get a bit of a better idea as to what the overall direction of the market is going to be. But if you are determined to trade the markets, then we'll go into the technical setups and the levels that I'm looking at to sort of define whether I want to be long or short. And we are kind of going to play this purely on a technical basis, at least for the week ahead. Okay, so let's start off by taking a look at the Aussie dollar. So the Aussie dollar, as you can see here from their daily chart, is still trading below the resistance level at 0.6365. So from that perspective, as long as it's below that level, then I would be looking for a shorting opportunity. There aren't any great technical setups at the moment. So from that perspective, you're going to have to wait until the market opens up, and obviously probably Tuesday or Wednesday of this week, to see how price action sort of plays itself out before you're likely to see a trade on this. But ultimately below this level, the 0.6365, that's where you want to maintain your short bias, look for short opportunities. And then if the market broke above that and gave us a momentum candle above that, then you may start looking for long opportunities. Although, having said that, remember that sort of just like directly above at 0.6408 is another resistance area. So if you were looking for the long, you'd probably want to wait until that gets cleared as well. And then above there, you've got some other previous support which became resistance at 0.6446. So if you're being conservative, you then wait for that to be broken as well. And essentially, you only really get clear water here on the Aussie dollar above the, let's say, the 0.6450 area. So, I'd say short below where we are right now. Up in that area over here, you can look to take the market long. If you're going to be really conservative, then what you want to wait for is the market to break above 0.6450, and that's going to give you the best opportunities. Looking at the euro dollar, so as you can see here, the market it completely changed its direction. Now, one of the good things to do with trading the euro is it's not just a dollar-driven move. Obviously, there is a lot of dollar weakness in this move here, but there's also a lot of euro strength. So, Germany came out and announced this 900 billion euro defense spending this week, which is going to do a lot for the Eurozone economy. So that's good. The European Central Bank came out, they cut rates, but they said that they weren't necessarily going to they didn't give any forward guidance to say essentially they're going to cut at the next meeting or the next meeting. They just said that it's going to be very much dependent on the data. So from that perspective, that's kind of, that's a good thing for the euro. Even though the interest rates are low in the Eurozone, they don't look like they're going much lower. So from that perspective, that is a good thing. Okay, so for this, what I'll be looking for here is a pullback towards a 1.0655 area, and that would be my support level where I would look to initiate a buy position with a 2 times ATR in there. The next opportunity is the pound dollar. The pound dollar looks like a bit of a carbon copy of the euro dollar, so the market has broken up. The level that I've got in here, the level that I'm looking at, is the 1.2675 area. So if the market can come back to that area on the 4-hour chart, then I'd be interested in taking that with a 2 ATR stop, 2 ATR take profit for a quick bounce to the upside. With these opportunities, I'm not going to be implementing any sort of like a scaling in or out option because, as I said, we don't really know what the market is going to do this coming week. Sentiment is all over the place. And so you don't necessarily want to be carrying positions. You want to be in and out very, very quickly. Hence I'm not giving you 2 levels that you want to enter from. I'm just giving you the 1 level. The New Zealand dollar here is very similar to the Aussie dollar. So essentially, below 0.5784, I'm looking for shorting opportunities. There aren't any at the moment, but that's essentially what I'm looking for. If it gets above there, then I can start entertaining buying opportunities, so above the 0.5781. But then remember, we trade up into 0.5855, which could provide a little bit of resistance. So if you want to be conservative with the Australian dollar, then you wait for that to get broken and then you start looking for your buying opportunities, because this really, if it wasn't for what's going on in the US for the moment, this would be my selling place. The 0.5861, that would be a very, very strong sell from that level. So I would say that you don't, and I keep saying recommend advice. Obviously, this isn't trading advice. I'm just talking to you what I need to do, what I'm doing with my own portfolio. Then you can take ideas from that and do your own due diligence, your own research. But yeah, so that's what I would do with that one there. I wouldn't really take anything until we get above the 0.5856 level and be looking for shorting opportunities below that. Like I said, if it wasn't for what was going on in the US at the moment, that would be a very, very strong sell. Moving to the dollar CAD, this one's a little bit more tricky because this is one that is directly in the middle of the of the crosshairs, if you like, of the trade war. So from that perspective, I'm not looking to do anything with this pair going into next week. The dollar franc has broken down. It is at a level right now where we're expecting a bit of a bounce up. You could actually initiate a buy position from where we are right now. But if you don't want to do that, if you want to wait to see is this move over, then what you do is you wait for a bullish momentum candle to close back above the 0.8820, and once we get that, then you initiate your buy position. It has sold off a hell of a lot. The long-term fundamentals, even though the markets aren't trading according to at the moment, are very much pointing to this particular pair moving up. But of course, like I said, it really depends on what's going on in the US at the moment as to which direction that's going to go. And then finally, we have the dollar yen. So the dollar yen has pulled back to a big level of support here at the 148.66. It broke through them on Friday. But essentially, what I'm looking to do with this at the moment is I would ideally look for a buy opportunity, but obviously I don't want to stand in front of this train. I don't necessarily want to become a seller right now because I think it's gone a long way and it is due a little bit of a pullback. Even if the overall direction, is going to be to the downside, I think it is due a little bit of a pullback. So from that perspective, I'm waiting for the market to close above the 148.65 level, and when it gets above there, I will initiate a very, very short-term tactical buy, not looking for it to go anywhere near the highs, literally just like a 2 times ATR, which is 151, which will give us about 300 pips there. So roughly from somewhere around this level here, if the market can just bounce up to that area there, that will give us the bounce that we need in order to be able to take profits. And if you take a look at this chart here, this isn't even a 50% retracement of this move over here. So we're not asking for anything at all really in order to be able to make money from this particular position, which is what I like about it. Okay, so that wraps it up. It is a bit of a tricky one. As I said, ideally, I think if you're new to this, you probably stay out of the markets this week. If you are desperate to trade it, and you're desperate to trade the majors, that's how you might go about it. But really and truly, if you still want to be in the markets, I'd really say that go along and take a look at some of the crosses, things like the Euro Aussie, Pound Aussie, Euro New Zealand, etc. Is they're going to yield much better and higher probability opportunities in the coming week, considering what's going on in the US at the moment. Okay. If you like that video, please make sure you subscribe to the channel, you hit the bell so that you get a notification as and when I release these videos. And if you have any comments or questions, please feel free to post it beneath the video. Otherwise, thank you so much for watching, and I look forward to speaking to you in the very next one. Take care now.